Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Thursday, October 26, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. We'll start with the big picture, of course, work our way into the day itself. This is a weekly chart. A couple weeks ago, we settled below this 248.78 8-9 month channel bottom that set up a test that I was expecting as like a 3 to 5 week move, incurred really in about 3 to 5 days. Not only testing 200.75, but also still anticipating 186.97. This is a weekly chart. We tested 200.75, or we came very close to testing it actually. On the daily chart, it comes in today at 202.75. So I'm going to call this a test essentially. Got a nice bounce. We are still susceptible to falling back to this area, which leads to, really this chart, this former channel bottom. I think there's a better version of it shown here. Yes, there is. This former channel bottom at 222.47 is our day ceiling, and you could say for the week itself, as I've been saying now really since early in the week, able to contain session strength. And once tested or below which, and we didn't actually test it, we came close to it, below which we can fall back to the 202.75 long-term speed line, which once again on the weekly chart down here is 200.75, an exact 2-point range today. Now, I don't expect to see this area, this lower area, unless we happen to break today 209.97. That is a carryover actually from yesterday. 209.97 is still our downside 5/8 Fibonacci for the week itself. We've got the Monday low against the Tuesday high, and on the way back down is 209.97. All these minor points are pretty much Fibonacci levels. I believe it's 3/8, half is 12.28, 3/8 is 14.59. They've all offered pretty decent trade for on Wednesday actually, but 209.97. If we happen to break 209.97, then yes, I do think 202.75 in reach again today. 202.75 on the daily chart. On the weekly chart, 200.75. Coming into the later part of the week, it could be a meaningful event. If we were to close today, I think even a daily settlement below 202.75, but I would add 200.75 if we were to close below 200.75 today, which would also obviously include a settlement below the speed line. And given the fact that we still maintain a 188.58 objective, 186.87 on the weekly chart. So your daily chart levels and your weekly chart are going to be a little different. But overall, having settled a couple of weeks ago below this meaningful channel bottom that is now well above the market at 248.78, we do expect as a 3 to 5 week objective the 186.97 channel bottom. And if we close today below 202.75, and you might make that 200.75. I hate to throw two different numbers at you, but those weekly versions have a way of holding where the daily ones just sort of allow slippage. In any event, I'll just bottom line this. If we close today below 200.75, I think you can anticipate a test tomorrow of this 188.58 descending channel bottom that extends back to the July high. This is a 3-4 month channel structure, 188.58 daily chart, 186.97 weekly chart. Combined can absorb selling through November, possibly the balance of the year. And from here, we can rotate back to channel resistance, which is presently well above the market in the 240s, 250s. So you could say that if we were to test, I'll just call it the upper 180s, 186.97 to 188.58 over the next few days, for instance, you may, if you're an options trader and you like trading both sides of the market, reach for 250 out of the money calls that don't expire for at least several months. That would be the rotational sequence to the upside. If we were to close the week below 186.97, then I would expect a retest of the 101.81 January low within several months. So I'm just giving you a heads up. If we close the week below 186.97, and I'm not expecting it because I do think this is a significant zone of support that may well absorb selling through the rest of the year. But if we were to close below 186.97, I don't see any good reason to be long Tesla through the rest of the year. You may also reach for 102 out of the money puts that don't expire for at least several months. That would be the downside play. But until then, this is your bottom picking territory, and it does begin at 202.75, but I just want to keep this as a weekly 3-star support level, knowing that holding above that 202.75 to 201.75 area actually does allow over the next few weeks a rally back to 259.6. So I'm not expecting it. I just think it's attainable. I think you should allow for it. I would expect it if over the coming few days we were to close above 231.85. And that's how I've been describing the market now this week. I'm going to show this chart once again that we are heavy below 222.47. This is a level that can contain session strength and once tested. And we almost did on Tuesday, below which 202.75 in reach again within 3 to 5 days. If we do close today above 202.47, I'm only expecting 231.85 tomorrow, Friday, which can also contain daily buying pressures. There's a part of me that really wants to call this a 3-star resistance area at 231.85. So, for you, 1 to 2 week, 2 to 3 week swing traders, you may have at 231.85. Perhaps I don't have a strong argument with that, but I do want to keep it light. Volatility is still relatively high, not like it was a week ago, but it is still there. And if we were to close above 231.85, then yes, the low 250s within 3 to 5 days. So, I like the 2 to 3 week breakdowns. I do like, for instance, this chart. You can read it as buying the low 200 area and then anticipating the low 250s. But I really can't subscribe to that right now. There's just so much between here and there. 222.47, we're heavy below it. That is our down pivot. We're below it, expecting 202.75 again, possibly today, as I mentioned earlier. And perhaps, given the fact that we expect 188.58 over the coming 1, 2, 3 weeks, you could say that holding below 222.47 actually allows 188.58 as well, where if you're short, profits can be taken. Long entry can also be made for anywhere from day traders out to a 1 to 2 month near-term position traders. So I don't think there's anything left to finesse. I'll say that if we close today above 202.47, you should expect a test tomorrow of 231.85, where we can top out for the day, possibly into next week, and if settled above, does signal recovery into the low 250s. We've got the 259.6 channel bottom. The weekly version, which you can see here, is pushing into the 250s next week, and so it really is a 250s long-term resistance, below which, I'm going to remind you, 186.97 remains a 3 to 5 week objective, and if we were to close today below 202.75, 200.75, we should tomorrow actually fall into the upper 180s targeted support. So I don't think there's anything left to say. I'm going to leave it at that. I'll leave you with this image for Thursdays. Please click like, share, subscribe, and check out wickedstocks.com. You have a great day.